November 20th, 2024. Today we had a parabolic wedge on the open. Three consecutive, you could argue consecutive sell climaxes or parabolic wedge, whatever you want. One, pullback two, pullback three, and then a bull channel up for basically the remainder of the day. Obviously, it doesn't really look like a bull channel. The bull channel is not probably the correct thing to say. We had, this is poorly drawn, but we had a bull channel, and then basically we ended up going sideways and then getting a rally. The way that I looked at it, instead of more of a bull channel, was we had a higher low major trend reversal, right? You have a trend line break here, a retest, and then a higher low major trend reversal, 26, 27, bull surprise up through 29. And then the whole pullback basically ended up being a bull flag back to around the low. And then we ended up getting a rally. So you could have bought the close anywhere in here. You could have bought the close anywhere in here, betting on a buy the close finish. You know, that 90% chance on any given day that we break out of the 18 bar range. So not too surprising that at the end of the day, we managed to rally and get above the high of the 18 bar range. Bar one, a bear bar closing near its low. Yesterday was a bull trend day, and we have a bear bar closing near its low. First off, that this was support, and it was support here. So what do you think was going to happen when we sell off down here? This area, this lower area, 8, 9, 10, not really a sell to close area because there were buyers. There's buyers. So you have to keep this support in mind if you're going to be trading in this area. Bar one, though, is a bear bar closing near its low. Some traders would sell the close. That 75% chance of 2 hours of sideways to down trading today, considering the fact that yesterday was a bull trend day. 2 consecutive bear bars, good for the bears. We're going at least a little bit lower. We're probably going to get a second leg sideways to down. So even if we pull back, that we're probably going to go back below the bar 2 low. 3, a doji bar, probably sellers above, scaling in higher. For the bulls, it's a high 1, and they're hoping that there's buyers above somewhere and that they get a huge rally, but it's really pretty unlikely, obviously. Maybe 15, 20% chance. You got to think that 80% chance that bar 2 is going to get a second leg. So you'd imagine there's going to be sellers above 3 scaling in higher. 4, second doji bar. So the traders who sold above 3 scaled in on 4. Consecutive doji bars. So some traders who sold the close of 2 disappointed in 3 and 4. 5, a bear bar closing near its low. You can sell below 5 for a swing trade. It's okay to be short, I think, after 1 and 2. And if you're selling, you're basically betting that we, instead of pull back, that we're going to head, down pretty much immediately, which is what ended up happening. I think it's more of a swing trade to sell below 5, but it's definitely a reasonable thing to do. 6 consecutive bear bars, good for the bears. But again, it's just a little bit overextended to the downside right now, but still expecting more out of this second leg from 1 and 2. We're probably going at least a little bit lower. And 5 and 6 is also going to get its own second leg. So there's going to be sellers above any bull bar and scaling in higher. 7, you can see there were traders selling above 6. So why are they selling above 6 instead of below 6? Well, if you sold below 5, you wanted to see a good follow-through bar because this was a swing trade. So selling below 5, that is probably going to go a little more sideways first. And instead, you get 6, which is good follow-through. I think if I sold below 5, I would be pretty happy with the follow-through I get on bar 6. But traders, they don't necessarily want to sell the close of 6. You definitely can sell the close of 6. There's nothing wrong with selling the close of 6 and putting a stop above 4. Not what I'm saying. You can absolutely do that. It's a good trade. But a lot of traders just wanted to get in at a cheaper price. So instead, they look to sell above 6 rather than below 6. But again, there's still nothing wrong with selling the close of 6. It's just in this particular case, a lot of traders opted to sell above instead of below. And you can see the rally on 7 rallied up to the bar 6 high within the first probably minute and a half. And so that's why traders sold it, because there was still 3.5 minutes of the bar left. So an increased chance that we were going to get some sort of move back down. And that's what we got on 7. Bulls who were buying, front running, trying to get 7 to close on its high, obviously disappointed with how 7 closed and sold out of their longs, which is part of what's causing this giant bear bar on 8. 8, most likely, we're probably going to go at least a little bit lower. Good for the bears, but I think the problem is we're getting into the buy zone, right? This area over here is a buy zone, and there's an open gap with the 3 high from yesterday and the 13 low, and we just closed it on bar 8. So there's probably some buyers somewhere in this area being ready to scale in lower. 9, another bear bar. So consecutive bear bars, 8, 9, but a large tail on 9. It's really not great follow through. And again, this looks like a third leg down. The first leg, 1 and 2, the second leg, 5 and 6, and now the third leg, 8, 9, and maybe 10 if we get more follow through, which it is. So 10, more follow through for the bears. But if you sold the close at 8, 9, and 10 are probably not the ideal follow through for you. So although it's okay to be short and okay to be looking to sell, it's kind of difficult. You probably want to sell a pullback. When you get a parabolic wedge or you get any sort of three-legged move, you have to keep in mind the third leg's high or low often gets tested. So where should you be looking to sell? Well, the traders, you don't necessarily want to sell down here because it's three legs down and it's probably going to convert into a trading range. What traders will instead do is they'll sell up here, maybe the 7 low, maybe the 8 high. This area is a sell zone because it's the top of the third leg. So 8, 9, and 10 is the third leg down. So instead of selling down here, traders will sell up here and look to get a trade back down into this area. 11 outside up, good for the bears. Good for the bulls. We're probably going to get at least a small leg or small second leg sideways to up. We have a large tail on the bottom, so possibly a wedge on a lower time frame, 9, 10, and 11, and probably sellers above 11 scaling and higher. 12, a bear bar. So you can see there were sellers above 11 during 12 because of 7, 8, and 9. But the reality is 11 is good enough for a second leg sideways to up. So we're probably going at least a little bit higher. But 11 is going to be a minor reversal. This is a really steep reversal down from 1 to 11. So the first ounce is going to be minor. 13, another bull bar, but a tail on the top. Good for the bulls. We're probably going at least a little bit higher. Again, I think the 7 low is the area where bears are going to sell. 14 consecutive bull bars, 14 and 15, probably going at least a little bit higher. Good for the bulls again, but I think the upside is pretty limited. 15, a bull bar or a bear bar, a tail on the bottom. So traders buying the pullback of 14 instead of buying the close. 16, another bull bar. Again, we're reaching the sell zone. So for me, we are in a bull micro channel, right? 11 through 15, 16, 17, 18. So it ends up being a bull micro channel. So the first reversal down will probably be minor. However, you have to keep in mind the fact that this is a really big sell-off. So even if the first reversal down is minor, we're probably going to get a couple of attempts down. 17, an inside bar, a high 1 for the bulls. The bulls are hoping that the tight bull channel continues up, or if it does pull back, we end up getting a higher low major trend reversal, which is what ended up happening. 18, a bull bar, but sellers at the moving average, sellers at the 8 high, sellers at the 7 low. Outside down on 19, so probably buyers below willing to scale in lower. And then 20, follow through for the bears. If you sell below 19, I probably would not. It is 3 pushes up. The first push to 14, the second push 16, and the third 18. And so we are probably going at least a little bit lower, but it's hard to sell below the bear bar. If you're selling context, you're not selling bars if you're selling in this area. 20, another bear bar. Good for the bears, but a large tail on the bottom, so it might not be as bearish as it could be. 21, another bear bar, probably going at least a little bit lower, but again, a large tail on the bottom. We have tails 19, 20, 21, so a possible parabolic wedge on a lower time frame. An inside bar, a high 1, 22, so bulls are hoping higher low major trend reversal 22, probably sellers above, scaling in higher. 23, a bear bar closing near its low. We should get a second leg from the sell-off 19 through 21, but I'm not sure how much lower we're going to go. I think the new low is the target for the bears. So the bears want to get below the bar 11 low before we get some sort of consecutive bull bars closing near their highs. Or, basically, you can stay short here until you get something that very clearly needs a second leg. 23, a bear bar closing near its low. Like I said, a low 1 short for the bears. Good for the bears. We're probably going at least a little bit lower. Follow through for the bears on 24. When we get 24, I think at this point, we're probably going to try and test the 11 low. Obviously, we did not, but 24 is the bar where if we are going to go, we're probably going to go below 24. Then you get disappointing follow through on 25. It's still a doji bar, so it's enough to make me think that a lot of traders would hold short, because although 25 might be a little bit disappointing, it's not a bull bar, so it is technically minimum follow through. But 26 is a problem. 26 probably shouldn't happen, and bar 26 does need a second leg. So a lot of traders who are short for any reason are going to exit above 26, since it will probably get a second leg. And then we get a major surprise on 27. 27 should not happen. 27 is pretty unlikely for the bears. And the fact that it happens means that we're probably not going to that new low. Instead, it's looking like 25 is a higher low major trend reversal, and we're going to try to rally. Do you buy the close of 27? Yeah, you can absolutely buy the close of 27. Because again, 27 probably should not have happened. Oh, sorry, that was loud. 27 probably should not have happened. The traders who bought the close or who sold any of those closes for any reason, we're not expecting a bull surprise, and now we have one. So 26 and 27 is going to need a second leg. So you definitely exit short above 27 if you didn't already above 26, and you can go long. 28, 3 straight bull bars. We're probably going at least a little bit higher. 29, 4 straight bull bars. So a higher low major trend reversal and 4 straight strong bull closes. We're probably going higher. We might pull back first. This was a deeper pullback than I expected, the whole move ended up being kind of a, I don't know if it was exact, leg one, leg two. Okay, so it was pretty close to exact. So first leg up, and then pull back, and then whoops, the second leg up was a biclimax. So I think it looked like a higher low major trend reversal, and we could have gone higher, but we ended up getting disappointing follow through on 30, which is fine. Spike up and possibly started the bull channel on 30, bull bar or bear bar closing relatively near its low. 31, disappointment, a big or bear bar, but you can see the bulls who bought the close of 29 disappointed 30, using 31 to sell out of their longs. 32, three straight bear closes, 30, 31, 32, and a reasonably tight channel down, 30, 31, 32. I think a lot of traders will exit on the close of 32 because 30 through 32 needs a second leg down. And once it needs a second leg down, a lot of traders prefer to exit the trade. If you don't exit the close on the close of 32, a lot of traders will just exit below 33, since that is four straight bear bars, and it probably makes more sense to just get out. So 33, I think, is the give up bar for the bulls. We're going to get a second leg sideways to down. However, we have a first leg up, 26 through 29, and a second leg, first leg down, 30 through 33. And they both need second legs. So I thought 26 through 29 was probably going to control the rest of the day and decrease the odds that we go anywhere to the downside. So I was not really that willing to sell 33 or 34 because I thought 26 through 29 was far too strong, and it increased the chances that we go up. And I thought if we were going to go down, we probably would have already tried to go down a little bit earlier. So 35, another bear bar, but a large tail on the bottom, probably buyers below scaling and lower. 26 through 29 should probably get a second leg up. And then 36, a big bull bar, you can buy the close of 36 because it should get a second leg up. And 26, 27, 28, and 29 should get a second leg. And 36 should get a second leg. So some traders will buy the close of 36 for some sort of bounce. I personally wanted to buy, but I wanted to buy lower. So I wanted to try and buy around the 35 high, but I never got filled. 37, consecutive bull bars, 36, 37. We're probably going at least a little bit higher. 38, three straight bull bars, 36, 37, and 38. I'm expecting a second leg sideways to up. 39, an inside bar, a low one short. Probably buyers below, scaling and lower, but you can expect a second leg up from 36 through 38, but you can also expect a second leg down from 30 through 35. So it's kind of a difficult area to do anything. 40, a bull bar closing near its high. This is, it's kind of a mistake to buy this bar. It's possibly a second leg trap at the top of the trading range. And the rally from 26 through 29 does need a second leg. It's true. So we should get above the 30 high. We should get at least one tick above the 30 high to complete the second leg from 26 through 29. However, 30 through 35 also needs a second leg. So if you're buying up here, it's kind of a mistake. You're probably buying a lot higher in a trading range than you should be. It's a low probability swing trade. And you can see a lot of bulls, instead of buying, they end up exiting, and then you get a bear bar closing near its low 41. Do you sell below 41? I don't know. I mean, it's a big bar, big risk, and 40, as much as it wasn't great, it was probably a reasonable buy. So we probably should get back to the bar 40 close at some point today. We've had too many strong rallies for me to believe that 41 is going to get a big move down back to the new low. So I personally would not sell 41. I think if you do sell 41, you probably want really good follow through. And you have to ask yourself, if you sold 41, is 42 the follow through you wanted, or is 42 just kind of meh for follow through? I wasn't willing to sell 41, but had 42 been a good looking bear bar like 49, then I probably would have shorted. However, you get 42 as follow through, and I think that's kind of disappointing. So a lot of traders buy back their shorts on the close of 42, causing the bounce on 43. However, there's sellers above 42, bad high one buy, and 41 and 42 is going to get a second leg down. 44, an inside bar, low one short, but you have to ask yourself, do you already want a low one? You probably want to see a strong spike and then a bear channel. The bear channel shouldn't be starting after basically like 2 bars. So probably buyers below scaling and lower. 45, a bear bar or a bull bar, buyers below 44. You can see we're in a tight trading range, right? So you're getting into the area where you should do nothing. So it's better not to sell below 41. Don't sell below 46. Don't buy above 47. Don't sell 49, 50, 51. Just wait for something clear. And so for me, 46 looks like a possible third leg down. Sell off to 42, pull back, and then 44, and then pull back 45, and then sell off to 42, pull back 43, leg 2, 44, pull back 45, leg 3, 46. So unless 46 gets pretty clear follow through, that makes me think it resets the count and it's leg 1. It's not really worth shorting for me. 47, a bull bar closing near its high. Yes, a few legs down, but we're at the apex of a triangle. Nothing is all that great. I would rather not buy above 47. 48 is follow through, but ask yourself if you think the probability is that much higher than it was on the close of 47. It probably isn't. So probably buyers below scaling in lower. 49, a bear bar closing near its low. I would not sell. I would just wait. 50 consecutive bear bars. You could sell below 50, but I think if you're selling below 50, you're kind of selling. It's kind of risky. You're still selling towards the apex of a triangle. So you need good follow through. 51 has a tail, so it's somewhat disappointing follow through. And so you're kind of waiting for that bar that makes you think, okay, this trade's going to work. I'm going to make a lot of money. And you see, if you sold below 40 to 50, 51 is not the bar that makes you think, oh, okay, this trade's going to work. I'm going to make a lot of money. 51 kind of buys you one more bar. You see 51, you say, okay, but now we should go on 52. And instead you get a doji bar on 52. And that's pretty disappointing. I don't think anyone sees the doji on 52 who's short and says, oh, that's good for the bears. We're going to go lower. Probably more of a disappointment bar. So traders start buying back shorts, 53. And then 54, I think, is more just bears buying back shorts, an inside bar, a low one short 55, but not really worth it. Follow through 56. Again, I'm ready to be flat for the rest of the day if we don't get some sort of strong breakout to either direction. 57, an inside bar. So the 758 II, again, tight trading range from 52 through 59. And just the whole thing, 30 through 59. It's a bull flag. And look how many rallies there are within it, right? The move up to it, up to 29 is really strong. Yes, the sell-off is strong, but the move up is stronger. 36, 37, 38, decent bull bars, and 40 closes on its high. 47 closes on its high. So while 40 and 47 aren't great buys, they still close on their high. And that increases the chances that we're going to go at least a little bit higher. 60, a bull bar, but a tail. Again, I still think tight trading range at this point. 61, consecutive bull bars. Good for the bulls. We could be starting the second leg up from 26 through 29. 62, 3 straight bull bars. We're probably going at least a little bit higher. And then 63, 4 straight bull bars, a micro channel. We're going to get a second leg up. Usually when you get surprises, so with my leg 1, leg 2 thing, usually when you get surprises like this, so you have a channel and then a big breakout above them, this is a climactic bar. So it's a breakout above a bull channel on a lower time frame. 60 through 62 is the bull channel, and 63 is the breakout. So I usually like to see any sort of follow through on 64, and then it's better to buy that. I did buy the close of 63 today and got the measure move up. I only made a little bit of money today, though. I did something really dumb. Well, I did some smart stuff and some dumb stuff, but the smart things I did today that just didn't end up working out, which I thought were fine, was I sold the 7 low with a stop, a measured move up here, and just basically waited for the bulls to get something that needed a second leg up. And then I exited on the close of 27. I had a limit order down here. So I basically took no loss, basically dead even on this. And then I bought above 27, higher low major trend reversal. And then once I got 28, this is my leg 1 system. So 26, 27, 28. I think we're going higher. I went for a measured move. And then I could have exited on the close of 32. I decided to give it one more bar in case we got a good looking bull bar. And then we got 33. So I exited for a small loss here. And then the dumb thing I did today was I bought, I wanted to get in here. I was trying to buy a little bit below 36 because I thought we were going to bounce because this needed a second leg. And instead of doing that, I ended up buying way too high and I just got out. So I bought up here and I got out down here, took the loss there. So I had 3 small losses, 2 small losses and 1 slightly bigger loss. And then this made up for all of that. And I ended up green on the day, but not as green as I could have been. So, lesson learned, just be more patient, second leg trap, and be more, I got a little too caught up in the bull side here, partially because I was right. I had a limit order to buy the 25 high, or a tick or 2 above, not get filled. And then I wanted 37 to pull back so I could buy here and not get filled. And I am just buying too high, which happens. But that's, I haven't made a mistake in like a week. So I'm pretty okay with, the occasional mistake. But anyways, 63, a breakout above the bull channel, 60, 61, 62. You usually want to see a follow-through bar. This is another good example. We have a bear channel here and a clear breakout 51. So you probably want 52 to be some sort of bear close. If 52 isn't a bear close, it's much harder to sell down here because the reality is bears might buy back shorts. So you want follow-through. So when I see this surprise, I want a follow-through bar, which I get on 64, pullback 65, 66, 67, but tails on all 3, maybe a wedge on a lower time frame. And think about it. Where did 67 go to? So why did 67 bounce where it bounced? Well, the breakout above the bull channel created a gap, and the gap was the 62 high and I guess the 64 low if you want to mark it there. But the 62 high was a breakout point. 63 was an unexpected bar. And the traders who missed out on the buy above 62, or the limit order bears who got trapped scaling in, probably pretty eager to get out. So bears buying back shorts here and bulls buying, trying to get the second leg up. 68, a bull bar closing near its high. You could buy above 68 for a swing based on the premise that this should get a second leg. 69, follow through, but a tail. 70, three straight bull bars, 68, 69, 70, and then 71, closing near its high. 72, closing near its high. And then basically a buy the close finish, huge bull bar 73. We're probably going to the new high at this point. Disappointment 74, but the doji bar, but there's going to be buyers below after this many bull bars and then a second leg up. For stop orders on the day, you probably could have sold below 1 or 2 or, sold somewhere during 3 or 4. You could sell below 5 or 6. I wouldn't sell down here. For stop orders, I wouldn't do anything in here. You could buy above 27, 28, 29. You can maybe sell below 33, but it looks like big up, big down to me. You could probably buy above 36. I don't know. Maybe you could sell below 41, but I don't like that because of how this is a good bull bar. So we might have to get back up here. So I really don't like that. Maybe you could sell these. I really wouldn't. And then you could buy this close or this close, and you could buy any of these. On the daily chart, obviously not. Is it bull? Okay, it is bullish. So obviously not ideal follow through if you bought above here to get that. So wouldn't be surprised if we got bull selling out along sometime tomorrow. But again, we're probably gonna have to get back up into this area. So wouldn't be surprised if we bounce up into the 59 area, 80 area, and start to go sideways. Really, what I think is going to happen, obviously, it's a bull spike. I think we're creating some sort of bull channel, but I would not be surprised if this becomes a trading range with this being below. This whole area seems like support, so I wouldn't be surprised if we make a trading range with those lows. The weekly chart, you can see initially buyers below, so bears trying to make it a bear close. I'd pay attention to that towards the end of the week. There were, as far as limit order trades on the day, I did like the limit order trade that I took. One, and I thought you could sell above 3, you could sell above 6. Those are really just the best trades. I would not sell down here unless you have an uber wide stop and are scaling in and then getting out back in this area. And those are really the easier limit order trades. Probably buying below 64 makes sense with a decently wide stop. You can buy below that as well, but it's late in the day. All right, that is going to do it for this video.